Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we're seeing some green arrows around the world this morning. The first time in a while that they're all pretty much aligned. We have Europe up about 0.5%, while the Nikkei leads Asia up about 2%. Our futures up about 4 to 5 handles on Fed Day. So, Scott, what are the possible scenarios you see coming today?
I thought today was hump day.
Well, it's both.
Oh, it's both. Well, I think everyone's speculating on what's going to finally happen. Is there going to be a policy shift? And I think there will be a policy shift, but it's just a question of whether or not they taper today, whether they want to, do something a bit more extreme, considering, the September surprise wasn't taken very well. So with that being said, let's just go right to the chart of the SPX, and I'll talk about the three different types of things that could happen today and then how to maneuver it based on your time frame. So if you look at the overall chart, you will see at the SPX that this trend that's been intact since November, it's not even near testing this. It's all the way up here. That's where the action is. That's where that trend is. That is your macro trend line. Okay, I don't think that gets tested at any time this going into this end of the year. But anyway, with that being said, if you navigate the quicker, more intermediate active trend, this is what we're going to be watching. So here it is. You have an inside range, and then you have an outside range, one being support down here and a bigger support down there. Here is your resistance, and here's your bigger resistance. So with that being said, if the Fed comes out and tapers today and announces a reduction in the pace of purchase of about $10 billion, chances are first move will be lower. Okay, so right down 1772 to 1777, that would be an area that could get broken. That gets broken. Then here is your 50-day at 1766. Okay, that would be a pretty big move to the downside, almost 15 handles. So I would think that that would be something where you could look to see if it holds. If we stay below this area for 30 to 60 minutes, the chances are, who knows, maybe it can get really extreme, or if we close below this, this could happen, into year end and then Santa Claus doesn't come. But again, if they taper and it happens quickly, I think that at some point, that negativity becomes positively, as good news could be good news. So the next phase is what happens if they come out like September and say, you know what, we're going to keep things exactly the way they are and until, the end of 2014, then revisit. You probably get a quick spike up, and then that most likely will wind up being sold because that means no tapering and the street wants some kind of shift. So with that being said, here's your micro resistance at 1792. There's 1800, which is right where this trend broke earlier last week. And then you have the highs here of 1813. So if they have that September surprise, that could happen, and then that might actually wind up getting reversed towards the end of the day. What probably would be the most similar to the recent action that we have would be as if they don't taper, but give a very hawkish stance that it's going to happen in January, latest March. Then you get those little false moves, probably within this range. And then I do think we wind up closing somewhat strong, and then maybe Santa Claus brings us back to the highs, by the time he wants to get his butt down that chimney.
Well, in terms of the groups to watch, we know that the banks are often active on Fed Day. If you had to say which bank has the best setup today?
I would say it's Goldman. I'm long Goldman and Bank of America, but we could do Goldman first because it's at near highs. It's closed 2 days above 170. So if they want to kind of goose the market into the Fed or try and get people to think it's stronger or weaker, all they have to do is break Goldman out. So sometimes they do that on Fed Day. We'll see. You look at the chart here, ultimately it's been trending higher, very sloppy. Now look where it is, above these prior three pivots. So if it wants to go, it can go. You take a closer look here, in order for it to get some real momentum, it needs to start to get above 170, 149 to 172.20. So with that being said, if I'm long a little bit, if it starts getting above there, I'll try and add, and then you could easily put a stop in at yesterday's low, or maybe give it a little bit more room to the 8-day, which would be about 169.
Well, you said you're long Bank of America as well. Walk us through that setup, because we did see it break below the 21-day after last week's pullback. It has been holding, though. Hasn't reclaimed the 8-day, though.
It's getting at that point. Something's got to give. I think either today or tomorrow it's going to show its hand, whether it ignites and puts it back on the map, or it breaks that level, and that just means the market, I guess, is that weak. So with that being said, here's the chart. A while back we had a great setup in early November where you had that igniting bar. Look at this. It looked like a monotonous trade, monotonous, and then boom, put it on the map, went sideways, and then look at the move to highs. So this is same type of thing where it's been pretty monotonous, or lethargic, or whatever adjective you want to name it, where it's been trending lower. So what do we have here? We have previous support, which comes in right around 1513. If it were to break below that, I guess I would have to get out, and then if it came back above it and gave you like some kind of tail like this, then that would show you it could be ready. If the market wants to rally and it starts to take out this recent resistance area and closes just say above 1535, maybe that would give you the day one igniting bar that could send it back on track to the old highs here come the first quarter of 2013. So I think it's worthy of watching right in here. The 50-day comes all the way down to about 1480. If it breaks that, that's why I would get out of the way if it broke.
Well, on the weaker side, we saw JP Morgan show some relative weakness yesterday. So if the market slips today, could this be one of the first banks to get some selling pressure?
Yes, I think this one's off the highs. It's still every other week I'm hearing about $1 billion settlement for this, a $2 billion settlement for that. And everyone's always said JP Morgan is like the class of the banks or whatever, but they're really, what are you doing? They're either settling just to get out of the news, or they might have done something wrong. Now there's talk that they hid some stuff from Madoff. There's, settlements with the mortgages. There's settlements with the London Well. P.S. Whatever. Let's get to the chart so I could stop talking. Here it broke below this level here. You do have a gap support right around there. If the market starts to sell off, I think that this will be the first thing that traders might try and short below the 55.66. If the market wants to take today's news in stride, here is the resistance. It's really got to get back above, just say 57-ish for traders to start getting interested in. But right away here, it does look like one of the weaker, worse setups than the other ones.
Well, if we see a stock like JP Morgan get pressured, could we see Citigroup get pressured as well? Because this one has been lagging.
Yeah, this one has been lagging, but you don't hear it in the news as much. Not using this one as a piggy bank like the JP Morgan guys over there. But you look here, this is kind of lethargic. You see this big upper range. I remember playing this about a month ago. We had a nice trade when it triggered above this little flag point. But then if you had an upper level stop like I did, I get out of it, and I haven't really touched Citibank since. So with that being said, though, it's come into some support. It's getting a little tight here. You could do this, just like all the other banks. And if the market wants to rally, this thing could get back on the radar if it gets above 51.66. If it doesn't get back above 51.66, I would just leave it on the side. And then here again is your support to trade against, and that is 50.27. So a lot of these banks are at a crucial inflection point. That's why I think today and tomorrow it's going to be pretty important for the type of action we get going into year end.
All right, well, coming up, we're going to go in the trenches with some trade ideas off of our Off the Charts newsletter. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with some trade ideas from the Off the Charts newsletter. Let's start with a name, Scott, that was one of your three amigos that was good for the drawer a few years ago and has been a solid performer, Coors.
Yes, whenever a quality name comes public, people get excited, and they get excited for this type of potential. You look at Coors, you look at what it's done since it's been public. Unbelievable stock for someone who put it in the drawer, a stock picker that said, I want to invest into this thing. Not all situations work out like that, but if you look at the chart here, of course, unbelievable. This is where it came public. Look at this trend that's been intact for multiple months all the way up. You're talking about a multi-bagger. If you want to talk about short-term active, which is from off the charts, this looks like it's right near the highs, trending above the 8-day. If the market wants to continue to go, I think you can get a cash flow trade above this 83.59 for a move into new historic highs, and everyone could be congratulated on all time frames if that takes place.
How about another retailer, Under Armour, triggered the off-the-charts buy price of $83.75 on December 11th, and it has been hovering at highs. Do you think it looks poised to make another move higher?
I do, and this one came public, I think years before Coors, and another stock you could have put in the drawer. I didn't mention that then, but it's something that we trade from time to time. It's been it's been in the morning call way back in the day, and look at this. This came public in 2006. all the way up to where it is right near highs. Again, showing you can be a stock picker, and I do see some kind of cup and handle pattern here that you could have navigated, where here's your cup, here's your upper handle, there you go. You go to the daily chart to check out what we could make potentially short term. Look where it is hovering right in front of prior highs. Looks stronger than most things out there. If the market wants to go, this is a candidate to get above this 85 area. Just remember, when you play for momentum and it breaks above it and you buy it, only stay with it if it holds above it, because weaker markets, they distribute trades into new highs that fell. In stronger markets, they actually close above it and continue. So we're not exactly sure where we are now. We'll get more as far as the market's concerned in the next day or so, but this can give us clues. If these have strong breakouts, we'll know that chances are market's going to be okay going into Christmas.
Right. Well, how about Groupon? Because Groupon actually triggered the entry price listed in off the charts yesterday. So how do you approach it today?
Well, if you long it, you stay long it. I like this stock. I think last week I talked about the day one. You look at the chart here. I've been kind of in and out of this thing. This is when you get excited. Look at this day one. Day one, here is support, opened below it, came back above it, showed commitment to it. Day one, day two, day three. Then it went sideways again, and then it triggered above that price, and now it still looks good. If the market wants to be up today, why can't this thing get above 11? And then there's another resistance point at 1150. Not the most quality of quality names, but something to do in December.
Well, and sticking with the group, Yelp had a nice breakout yesterday at 66. The stock was able to log in a 4.5% gain. So, Scott, do you expect upside potential follow through today?
Mark's been all over this one, and I've traded it from time to time. There's been like 3 nice little setups, which I want to show you so people could see why we get excited about things on charts. Here's when this thing was trending lower, really tight. You had your first move right there, that woke it up. And then what did you see? You saw commitment to that move as it held higher. Here you had a quick little micro trade. Then it got engulfed, needed more time. Then yesterday it poked its head out. So if you did buy it yesterday, I think the next real level here comes in a little bit closer to 70. I think that there's room between here and there. If it were to get above yesterday's high of 67.48, I think you get some continuation to what could be $70, which is resistance.
And VJet's been in a newsletter as well. It broke below 36 yesterday. Where is next support and where's a buyable point?
You know what? We have actually a short on there. People say to us, why don't you have that many shorts in off the charts? And it's because, we've been in a bull market, so why list things that are harder to find than things to the upside?
Right.
So with that said, you look at VJet, which, was a great trade. I think we had it actually even long enough the charts here. Shows you how setups change. This is when it was nice and tight after it came public. Here's when it took out the IPO high and gave you a big move, a big move. And then this is when it changed, when you had this king and queens formation when it closed below that low, and then boom. That's when I think Muddy Waters talked about how it doesn't have too much in sales. And since then it's been wedging, and now it's somewhat coming below this area. So I guess if it, they want to sell something, if people don't want to show it on the books, I think your next area would be this, support, and then you have where the IPO was. So just be careful here, though, pressing things like this to the downside, because it has come a long way. Trade it at your own risk.
All right, and Tesla met some buyers again after a few days of rest. It triggered the listed buy price or entry price of $142.50. So what now with Tesla?
Well, it's found some support, and it's starting to trend higher, and it's given us multiple entries, which has been good during a time when it's been very stock specific. So with Tesla, you'll see that this has changed its composure a few different times this year. In the beginning of the year, it could do no wrong. It was trending, it was holding the 21-day the entire time, giving us lots of nice setups, lots of nice breakouts. That was then right here. Another one was right here, but then it changed when it showed some relative weakness, broke that trend. This was where it was prior to earnings, then it sold off. Here is when the trade came back on. You had your red dog reversal, where some people put it on as a swing. If you did so, congratulations. If you waited, and you wanted to see this confirmation of this move, you had another little red dog reversal. And then, you had an additional buy price here. Then yesterday you had a little bit of an additional buy price again as it held. So I think the next level coming in here would be this 156.74. And then who knows, maybe it tries to get near the earnings gap. But ultimately, it's come a long way. I would trade it with a little less size, but ultimately it's been working and the price action's been somewhat strong.
All right, let's do some quick hits here and talk Apple. We have Apple down a little more than 1% as we still don't have any real China mobile news. How are you approaching Apple, Scott?
Well, thank goodness I came in flat, because it's given you really no reason to buy it. Some people were talking about buying it yesterday because it was supposed to have the news, but I don't buy things on what should happen. If anything, maybe I would have taken options and that would have been risk premium paid. Anyway, with it right now, early in the week I talked about how I thought perhaps I could see the 21-day around 546. It's there. So you go to the chart and you'll see these levels. This was that little top when I guess it sold on the news it was supposed to get the deal. Didn't get the deal, so maybe you buy on that. With that being said, 21 days risen to 549, and then you have a gap that can get filled at 546, and then ultimately you have this trend that's been intact pretty much since the summer lows. So I think that really needs to hold. And I would say for Apple to be any good, it really needs. I don't think it gets tested today, but you have support area 1 would be today. Today would be great if it could get into here and reverse up. That would be a quick active trade. If it doesn't rally and it closes near the lows on this gap down, then maybe it could come down to this 538, the prior high, and then even get close to the trend line or the 50-day, which comes in around 530. So let's see what it does here. Don't have opinions. Trade a level versus a level.
All right, Time Warner Cable starting to turn around there. Was they actually able to reclaim the 8-day EMA? Should we expect some upside follow-through today?
You know what? This stock is in the news because of potential takeover stuff. So for me, I would just go with options because if it doesn't happen, it could fall apart. Okay. You look at the chart here, you'll see that the stock price right now is at 133, was as high as 140. Lots of different talk across the board. If you want to be in it for what could be an acquisition, which has been all over CNBC, I'm not talking about it. So with that being said, maybe you buy the 135 calls or the 140s just to be involved if you want to be involved.
And Facebook, we know that looked great yesterday, put a new all-time high at 55.18 yesterday. Does it need a little bit of a break? What do you think?
What a mover.
Right?
I'll tell you, about 3 weeks ago it had that red dog reversal at 44.04. Since then, multiple buy areas. Now, you could trade it, short term on smaller time frames, but I wouldn't be putting on a meaty position after the move that we've just had. You look here at the chart, you've had your chances. Here was that red dog reversal I just mentioned at 44.04. It was in a downtrend. No one knew where it would bottom. This gave you the first clue. Here you go. The second clue is when it had commitment, showed that it could hold higher, and then you had an entry here, another one, and then boom, right back at the high. So I would say short term, watch 55.18. Gets above 55.18. Look at that. There's nothing in the way. So hopefully you're not rolling up shorts. But if you're looking to be long, for momentum, I would say if it gets over there, buy it. If it gets back below it, get out of the way. Then who knows? Maybe you get some kind of red dog reversal the other way.
Well, and from Facebook to Twitter, we did have Twitter show some downside follow-through yesterday after its red dog reversal on Monday. What do you think about Twitter now? Does it just need a little bit of a break, some digestion to be healthy for higher prices? Yeah,
well, if you think about the size of the run that it had, I know for me, yesterday I was like, okay, let me look for a short setup, and we had it yesterday, 2 days ago, and then yesterday had some follow-through.
Right.
But it didn't fall apart. So there's still some buyers here that are looking to maybe buy the dip in Twitter. I don't think you rush to do that, but overall the chart to me looks pretty darn healthy. Here is when it broke above the 42. Here's when it broke above another pivot. Here's when it broke above the IPO high. And then this was that red dog reversal when it went through 59.40, came back below it. I got short. Yesterday you could have sold it in the green, and then it wound up going through the prior low for more follow-through, and then a reverse. So now I have no position. I think if it could build above here and hold above this and let the moving average catch up at some point, maybe you could even buy it. First stop, above 57.38. And then, in my humble opinion, I do not think that this peak is going to be the peak of Twitter over the next 3 months.
All right, so any last words of advice as we begin the trading session on Fed Day?
I will say I typically hate Fed days.
Right.
I think the action is erratic, the action is random, but this one's a little bit bigger because he's having the communication, and so it's a really big telegraphed event. So what it means, it'll probably just be more erratic and more random, and sometimes that creates opportunities. So we'll see what comes out, and then there is some kind of trend that usually gets established in the last half an hour, and then typically the real action happens the day after. So with that being said, I would not do too much today. I would not get too frustrated. I would not make major bets. And as far as if you're a macro investor and you've been holding for the last few years, I wouldn't be too worried about it. If you're trading for cash flow and P&L, you know what? Just pick your spots and know your levels, and trade the extremes after the news the first 30 minutes, and then give it some time and see what happens in the last half an hour of the day.
All right, good advice, Coach. All right, happy trading, everybody. Have a great day.